Today is Monday, January 30th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, there are several major central bank policy meetings this week. What are the likely outcomes?
Okay, well, first of all, we have the Fed holding its two-day meeting concluding on Wednesday, and most likely the Fed will slow the pace of its tightening path, probably raising rates by just 25 basis points. But also on Thursday, we have the European Central Bank and the Bank of England holding their policy meetings, and they are very much on track to hike rates at each of those central banks by 50 basis points.
Stock index futures, Alan, what is your outlook for stock index futures this week?
So I think in advance of these central bank meetings, especially the Fed, I think that the trade will be basically an evening up trade. Traders naturally would not want to hold too many positions ahead of a Fed meeting, especially with Fed Chair Powell holding a press conference following the statement on Wednesday. So I'm looking for just a sideways trade in stock index futures between now and Wednesday. But once the meeting is out of the way, I think we'll probably see a bounce. So a move to the upside, I think, is likely once we know what the Fed has in mind with their statement and their press conference out of the way.
Of course, everybody continues to watch the interest rate markets. Alan, what are the charts saying about the direction of the interest rate market futures?
Well, first of all, futures across the yield curve have made very significant bottoms in the fourth quarter of last year. And since then, we have traded quite a bit higher as interest rates have declined or apparently have peaked. And I think they have peaked, and I think the futures have bottomed. So my belief is any breaks should be used as buying opportunities across the curve, whether it's the short end, the Fed funds futures, or all the way to the long end of 30-year Treasury bond futures. Any break in these markets should be used as an opportunity to come in on the long side.
Thank you, Alan. Mark, looking at the grain markets, what are the key factors that will drive agricultural prices this week?
Well, as usual, this time of year, South American weather will be critical in the price discovery process. After weeks of drought across Argentina and southern Brazil, there have been a couple of waves of heavy rains the last couple of weeks, which have improved crop prospects, particularly across central Argentina. Conditions across central Brazil, however, have been too wet, preventing a timely harvest of what's certain to be a record soybean crop. The outlook now into the first half of February is a return to a bit of a drier pattern again. Outside of weather, we had war headlines last week caused a little bit of a stir as the U.S. and other allies have announced donations of tanks to the Ukraine. That stimulated a bit of a short covering bounce in wheat. This week, we also have the FOMC meeting, as Alan has referred to, and the usual demand reports. But I think what will be most critical importance is the return of China from their Lunar New Year's holiday and the impact of lifting their COVID restrictions. So with the surge back above the $15 level in soybeans, it seems to me it's discounting some additional Chinese buying here of the U.S. soybeans in the near term. But with a record soybean crop in Brazil and already large export sales on the books outstanding to China, I think things are getting a little bit overdone to the upside.
Mark, traders watch the weather in South America this time of year, and you mentioned the recent rain in Argentina. With that recent rain, what's your price outlook for corn?
For now, I think we're range bound. A couple of weeks of strong export demand has driven prices up to the top end of the range, which we see at about the 690 level. Downside, the 650 level. U.S. is likely to experience a couple more months of pretty strong export demand until we get into the Brazil's second corn harvest this summer. For now, the Ukraine is the only country that's offering corn at cheaper levels than the U.S. And we're going to need to see that improvement in export demand just to reach the current USDA forecast. We're running about 45% below year-ago levels. USDA forecast is only a 22% drop. Demand for ethanol production is also running below the pace needed to reach the USDA forecast. In addition, speculative traders are long corn now for going on 2.5 years. So I think we're going to grind sideways until we have a better picture of the South American crops and also see what impact Chinese appetite, if they have any for more corn here after importing large amounts from Brazil here in the last several weeks.
Mark, a lot of people like to follow the money. Do you see the recent fund rebalancing having much impact on agricultural prices?
In the short term, no, I don't think it will. Last week, index funds, they were modest buyers in corn, Chicago wheat, and the soybean complex, while being light sellers and livestock futures. Since reaching a record long position last spring, index funds have been really shedding length now in the agricultural commodities for about the last 9 months. It's pretty much in tandem with the higher interest rates with the Fed tightening program. I expect index fund positions to bottom out sometime this spring with the conclusion of this Fed tightening program. And if the U.S. and global economies are able to avoid moderate or deep recession this year, I look for index funds to begin back adding exposure in the ag space here in the second half of 2023.
Thanks, guys. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.